Morning Trade Live, we'll get a closer look at the AI infrastructure segment when Dell reports earnings after the close. This stock is down more than 20% over the last month due to margin concerns thanks to rising memory chip costs. So Dell hit a 52-week high on November the 3rd. It's currently down 1.5% ahead of this key earnings report. So let's go inside out on Dell ahead of earnings. Joining us now is Michelle Connell, CFA, President, Owner, Porsche Capital Management. Thank you so much for joining me today, Michelle. What are you expecting from this company to report later on this afternoon?
I think everybody is waiting on the margin story. A lot of analysts that you saw on Wall Street have gotten in front of the margin story and already taken down their estimates and their target for the stock. There's so much focus on that, and seems to be less focus on sales for the company.
Yeah, you raised such an interesting point. I think it's all going to be about that margin resilience. You said, of course, the analysts have been trying to get ahead of some of the margin pressure. I mean, is this likely to show up in the quarter that was, or is this going to be key to the commentary from the company?
I think it's going to be the commentary that we're going to have to focus on, because the belief is that Dell has had a large enough inventory on the memory chips, but now that's going to become more of a problem as they've had this increasing demand for their AI servers. And so that's where I think the focus is going to be. And it's all what caught my eye when I listened to the recording is the company has stated they're going to be able to get that operating margin to between 10 to 14% by the end of the fiscal year, which is only one quarter away. Last quarter, the margin was 7%. That's a pretty big goal.
Right, it certainly is. Let's just run through the estimates as far as what we're expecting here. I mean, EPS of $2.48 on revenues of $27.2 billion. Interesting, I just did see a note out from Bank of America, actually, lowering the price target into earnings ahead of results, though expecting the report to be in line with those numbers, but also talking about how they'll likely price and reduce OPEX to offset the memory increases. Do you believe that we could see some of that?
I think that is possible, and it's interesting. It's especially with this particular sector. Analysts typically don't like to make a call like this before the earnings estimate. So that tells me there's some real concern here that they don't want to be blindsided for their clients.
Yeah, no doubt about it. I mean, just if we look at the earnings season that has been, I mean, Nvidia, some fairly strong numbers, although we did see a sell-off post-earnings, certainly on some of the AI valuation concerns. Do you think some of the underlying worries in the market about this whole sort of broader bubble talk and, what we're seeing as far as the circularity of financing is likely to hit a name like this post-earnings?
It's all part of that, bubble concern and the circular argument, right? Especially when Dell is so closely tied to Nvidia. They have a server that's tied specifically to Nvidia. It's the total solution, Dell with Nvidia. So right now, maybe that's not such a good partnership to be affiliated with. That's not the long term, obviously, right? But we're talking about short-term trading, especially when we've had such a great year in the majority of these names. Any fear or possibility of missing not earnings but your profits, the money goes out of the name.
Okay, and I'm just looking at, you've got a price target of $165 right now. We're at 124 and change. So you do suggest that there could be further upside from here, but we have to leave it there. Michelle, thank you so much for giving us a preview of Dell ahead of its report card. Michelle Connell, CFA, President, Owner, Porsche Capital Management. Appreciate it. Let's trade it now with Tom White, host of Fast Market, an example trade for us this morning for Dell. Tom.
Yeah, it's neutral to bullish here, Sam. In taking advantage of some higher implied volatility levels, it's a custom four-legged spread. But if the stock kind of remains here, goes higher, or actually goes a little bit lower, you can still be profitable on this four-legged spread. So let's break it down. November 28th, weekly options that expire in just 3 days. We're going to sell an out-of-the-money put vertical that's neutral to bullish, and that allows you to collect a credit, right? We're going to sell the 118 put and buy the 113 put. So a short $5 wide put vertical that's going to help finance the purchase of an upside call calendar here, and we're going to use the 133 strike call. We're going to buy the December 5th weekly options that expire in 10 days, the 133 call, and sell that same 133 call in the near term November 28th weekly options, 1 week wide call calendar to the upside. As a package, this four-legged spread, you're actually going to collect a credit of 40 cents. You can see here from the risk profile, you want this to go up near that 133 strike. That's about that one standard deviation move that the option market's pricing in, which is about a plus or minus 7% move in the shares. Now, if you collect that 40-cent credit, if the stock continues to move but way above 133, maybe goes above 140 to the upside, you're going to be able to keep that credit. So anything above the break even of 117.60 to the downside is going to be profitability. Now, that break even is about that one standard deviation move to the downside. So you've got that cushion. Now, if you collect that 40-cent credit, anything above 117.60 is going to be profitability on this. You can see where the apex of profits come, and that's at or near that 133 strike on this one. So trying to play for that one standard deviation move to the upside. You're selling that out of the money put vertical to take advantage of that higher implied volatility levels, which allows you to collect a bigger credit, offsetting all the costs on the bullish call calendar in this four-legged spread, where you think it's, hey, even if it just consolidates at the current levels around 125 or even goes down to 120, you're going to still be profitable on this trade.
Okay, Dell currently trading down 1.7% at 125 and change. So thanks so much for the example trade this morning. Tom, ahead of the report card.